Hi, this is the third and final video in the series for example sums on the topic of redemption of debentures in lump sum on maturity. So let's go to the example 6. Example 6. FS Limited, an unlisted non-HPFC company, has a balance of rupees 4 lakh in surplus balance in statement of profit and loss. It is to redeem rupees 3,50,000 12% debentures on 30th September 2020 at a premium of 10% as per the terms of the issue out of profit. Debenture interest is payable annually on 31st March every year when the accounts are closed. The company also has a balance of rupees 2 lakh in debenture redemption reserve. Tax was deducted at 10% on the interest on debentures and deposited in government account. The required investment was made by the company in government securities on 30th April 2020. We are asked to journalize the transactions. Now let's calculate the amount of the DRR which is required. Amount of DRR required. It says that the company decided to redeem as per the terms of the issue out of profit. So the amount equal is 100% of the face value of outstanding redeemable debentures, which is 100% of rupees 3,50,000, which is equal to rupees 3,50,000. Now DRR already has a balance. So DRR opening balance is equal to, it says the last line in the first para, the company has a balance of rupees 2 lakh in debenture redemption reserve. So the opening balance is rupees 2 lakh. So we need to create DRR. For the amount required 3,50,000 rupees minus the existing balance 2 lakh rupees, which is equal to rupees 1,50,000. The date of the redemption is 30th September 2020. So the date of DRR creation will be 31st March 2020. It says that the company made the required investment in government securities on 30th April 2020. So the date of DRI is equal to 30th April 2020. Let's find out the amount of the DRI. It's equal to 15% of the face value, which is equal to 15% of rupees 3,50,000. And this comes up to rupees 52,500 rupees. Let's go ahead with the solution. In the books of FS Limited, journal, date, particulars, LF, debit rupees and credit rupees. We will transfer to DRR first. The date on which the transfer is to be made is 31st March 2020. surplus, that is balance in statement of profit and loss account debit, to DRR account, the amount transferred as per the working note 1,50,000 rupees. For transfer to DRR. Now the investment has been made on 30th April 2020. So DRI account debit, debenture redemption account, investment account debit to bank account for investment made. The amount of the investment made is 52,500 rupees. We'll move on to the date of the redemption, which is 30 September 2020. Now, before we redeem the debentures, we need to pay them, that is the debenture holders, the interest amount on the debentures. So let's calculate the interest on the debentures. The total face value of the debentures is rupees 3,50,000. It is given that it is a 12% debenture, so per annum interest is 12%. And we need to pay it. The last payment of interest would have been on 31st March 2020. And we need to pay from 1st April 2020 to 30th September 2020, which is for 6 months. So multiplied by 6 divided by 12. This amount comes to rupees 21,000 rupees. So it's debenture interest account debit, ₹21,000 to TDS payable account. It's given as 10%. So the amount is 2,100 rupees to debenture holders. Account 18,900 rupees. The difference between 21,000 and 2,100 for debenture interest and TDS payable. On the same date, 30/9/2020, we will pay off the debenture holders the amount of the interest, debenture holders account debit to bank account 18,900 rupees for the interest paid to the debenture holders. We will also deposit the tax in the government account. TDS payable account debit to bank account 2,100 amount of TDS for TDS deposited in government account Now we'll continue with the other entries. First, we will sell the debenture redemption investment, bank account debit to debenture redemption investment account for DRI realized. The amount realized 52,500 rupees. On the same date, we'll make the amount due to the debenture holders 12% debentures account debit 3,50,000 rupees, premium on redemption of debentures account debit 10%, which comes up to 35,000 rupees to debenture holders account 3,85,000 rupees. Amount due to debenture holders. $39, 2020. We will pay off the debenture holders. Debenture holders account debit to bank account. Amount to be paid 3,85,000 rupees. For debenture holders paid off. Same date of redemption, we will transfer the DRR to general reserve. DRR account debit to general reserve account. The amount of DRR transferred is the full amount including the opening balance, the amount which we were supposed to create. So, transfer of debenture redemption reserve to general reserve account. Now we need to transfer the debenture interest to the statement of profit and loss 31/3/2021 at the end of the accounting period. Statement of profit and loss, finance cost to interest on debentures account. The amount of debenture interest 21,000 rupees. For interest transferred to statement of profit and loss at the end of the accounting period. So the entries are done. I will remove the split. We can view the answer. That's the example sum 6 at the top, followed by notes, the amount of DRI which is required, the calculation amount of DRI, as well as the interest on debentures. This is the first screen of the journal entries. The second screen. And the third screen.